I think a big thing that newer people easily overlook when it comes to day trading is how short sellers think, and that short sellers make money when stocks go down lower. Knowing how a long thinks and how a short seller thinks helps with your technical analysis skills. When it comes to these penny stocks, it's a very, very, very competitive field when it comes to short selling. Everybody out there getting into day trading, they see traders out there like Steven Duck, Tim Gertani. They're one of the top short sellers in the penny stock land, and they see these guys pulling in hundreds of thousands, millions of dollars just simply shorting these garbage penny stocks, and they make a lot of money, and people instantly say, I want to get in on that and do that too, because we all know these penny stocks, they're garbage companies, and a lot of times they pop up and then they fall down. I've never been much of a fan of shorting. My whole career, I've made most of my money going long on stocks, and I see a lot of really good opportunities in short squeezes. We've recently had some epic short squeezes that the whole world pretty much was a part of, when GameStop and AMC had amazing squeezes to the upside, and a lot of people didn't even know that they were squeezing up, and they joined in on it. Knowing how a short seller thinks goes a long way, breaking down charts and understanding how these stocks like to move up and down. We know that shorting stocks, it's very competitive, especially when it comes to small cap stocks. You're limited on the number of shares that are available to short the stock. We know that it's very competitive. Everybody wants to get in on short selling these penny stocks because we know most of them fail. They look up and they admire their guru. They want to imitate their guru. So these short sellers, especially when it comes to small cap stocks, you'll notice that the popularity for a broker to have shares available to short the stock, it changes from year to year. 1 year, TD Ameritrade could be the broker to go to for borrows for shorting small cap penny stocks. Next year, TD Ameritrade doesn't have any shares at all, and you'll notice E-Trade always has easy borrows. Then next year, Centerpoint Securities has easy borrows. So every year, the popularity in brokerages having shares to borrow, it's always been like that throughout my career. I mean, my career, what was it? 4 years ago, what was it? I think it was TD Ameritrade had easy to borrow, and then it flipped over to E-Trade, and then it flipped over to Cobra, had easy borrows, and then now this year, I forget what it is. I want to say Lightspeed maybe, but I may be wrong. So being a short seller, you have to have multiple brokerages open, and with it being so competitive, you have to wake up super early to reserve and locate those shares to short the stock. Now with it being so competitive and you're locating these short, you have to pay a fee. It's called a locate fee, and then on top of that, you got to pay another fee to hold those shares. So even if you don't use those shares to short the stock, you still have to pay a fee for holding them. And now this is where the mind games start to come in. Now that you have the shares, you've located them, they're on hand, now you have them, now you kind of feel obligated that you have to use them because you're paying all of these fees to short the stock. So this is when short sellers, they start top picking on these small cap stocks, or once a stock tops out, all the short sellers pile in on the penny stock, they overwhelm it, and then once the penny stock bottoms out, like it does right here, for example, once a penny stock stops going down lower and it starts trending up higher, all those short sellers then have to cover their position And then you have retail investors coming in. They're buying as well. I call it a double whammy. That's when you start to see prices skip to the upside real violently and quickly. And it's from short sellers covering their positions all at once. Once one short seller starts to cover, it's like a domino effect, and other short sellers start covering. So it can be a bit complex too, in understanding, knowing all of this going on by simply just looking at a chart. But as I've said to you guys, and as I say at the end of all of my videos, have that patience, have that discipline, study, study, study. As traders, we're studying these charts, we're breaking them down, we're getting better, figuring out why did this stock move from here up to here, pulled back down to here, and then ran all the way up here and just kept running all up like this. By doing this, you're seeing human behavior patterns play out over and over and over again. Look what happened. This stock came all the way back up to $10 right there, pulled back down, and then squeezes up here to a high of $17.75. It's up to you to tell the stock's story. Every stock is going to have a story to be told, and it's up to you to put the pieces together to tell that story. So knowing how a short seller is thinking and how a long is thinking, and putting it all together to make sense of what's going on. When these short sellers, they start top picking the stock, you'll just see it squeeze up higher and higher and higher and higher. And this is where I'm going back to saying, when they reserve those shares and they're on hand, they feel obligated that they have to use those shares because they've already invested in the fees, and then they know how competitive it is. They could have the shares today, not use them, but then they can't get them tomorrow because somebody beat them to the punch. So when it starts squeezing up like this, short sellers automatically start to think and assume this is a garbage penny stock. It's got no business being up this high. So they start shorting it. And once it starts failing at the high of day and starting to pull back down, that's when all the short sellers say, all right, it's time. It's topped out. They start averaging into it, and then all these short sellers start to overwhelm it. And then this is Friday right here, what I'm drawing out. Then we close after hours. Monday morning, all those short sellers wake up. The stock's gapping up $5 a share up here to $18. All those short sellers start to panic, and they have to then buy and cover their position. And then you have retail traders like to trade and go long. You have those people coming in. It's the double whammy effect, squeezing the stock up even higher. So that's when you can really start to see some really crazy, violent short squeezes to the upside. And by knowing all of this and putting it together in your head, and you know what's playing out because you've seen it time and time and time again, it does help with the psychology part in holding on to your trade and letting it work out. And it all comes with time, by seeing this play out over and over and over and over again. Now, everything that I've just explained in this, some people, you may not comprehend or understand everything that I just broke down and understand. It takes time to fully understand this. Look at AERC here. This stock recently ran up, and it's still continuing to squeeze up to the upside. This was the #1 stock last week, running up here from $2.50 all the way up to a high of $6. See how it tops out there after hours, and then the next day it's gapping down right here, starts to trend down lower. Short sellers think it's over because they're saying this is a garbage penny stock. It was just at $2.50. It's all the way up here to $6. It's got no business being up this high. It just tripled in value. So all these short sellers start piling in, overwhelming it. And look at how crazy this stock squeezed up. It squeezed up from $4 all the way up there to a high of $14. It ran up another $10 per share right here. That's insane, and that's good opportunity. And we see moves like this happen all the time in small cap land, all the time, simply because, like what I like to say, very competitive for short sellers. They all want to make money from their gurus they look up to, Steven Dux, Tim Gertani. I mean, they see Steven Dux pulling in millions of dollars, shorting these garbage penny stocks. They all say, man, I want to be like him. So they start obsessing over him and trying to imitate him. It's one of the oldest tricks in the book. We see so many people try it, then they fail. They get a bad first time experience, and then they say the stock market's rigged. They give up and then they quit. We see a lot of people come and go in this game, and everything that I've broke down and explained to you guys in this video here, it's a lot to take in and comprehend. This is the way you have to try to think, and you want to try to stay one step ahead of your competitors. Who remembers back when GameStop and AMC had those wicked run-ups? All that was a giant short squeeze. Some institution out there got stubborn, didn't cover their position, and the stock kept squeezing up higher and higher and higher. And a lot of people failed to really understand that all that it was a short squeeze. And for traders out here, we're out here every single day seeing this happen over and over again in small cap land. Most of us know after a stock squeezes up higher, it's got no business being up that high. The prices are going to gradually decay all the way back down to where it came from after the squeeze. Once all the short sellers get squeezed out, the stock's got no business being up that high. It'll just gradually decay all the way back down. And the gradual decay back down, it could take days, it could take weeks, it could take months. And there's still some good opportunities for bounce opportunities, reversals, and so on. But the main thing I really want to get across in this long video here, how you really truly got to understand the aspect of how these short sellers are thinking out here and how these longs are thinking out here. It's a battle between the bears and the bulls, and you need to know how these bulls and bears are thinking and who has control and how has it played out over time. It's just like being a history buff and you're going back in time and you're learning about all of the history from all of the wars.